Hello, I'm Debbie Bell-Hosking for FinextraTV at Payments Unleashed EMEA, and I'm joined by Phil Bruno, who is the Chief Strategy and Growth Officer at ACI Worldwide. We're talking all things innovation, we're doing a deep dive, and also into execution. So, welcome.
Well, it's great to be here with you.
It's lovely to have you here, Phil. And I was just thinking, when I went welcome, I'm thinking, oh my goodness, we're talking innovation. But there's a lot to talk about, and we can hear the discussions behind us as we speak here. So banks are told they need to scale. Banks are told or advised on where they should focus their energies. But from your perspective, your point of view, how do you think banks should be thinking about innovation decisions?
Yeah, so banks really have to grow. And they also have to recapture the consumer and the consumer mindset and interactions, right? 70% of consumer interactions with financial institutions are now with non-banks, where they get their advice, how they do their transactions and such. So banks really have a lot of work to do, and it's going to take a great deal of innovation for them to do so. So innovation in their products, innovation in their service delivery, and innovation in the customer experience and channels.
And I know that perhaps even here, but I'm aware that you speak about the ratio when it comes to innovation of value and technology. What are the markets today telling banks about their approach to innovation?
Well, the markets in some ways are, I'll call it a little negative on banks, because if we think about the price to book ratio for banks, so this is their stock price to the book value of their assets, only about 15 or 20% of banks actually have a price to book ratio greater than 1. So the other 80% are expected to destroy value. But the ones that have a price to book ratio greater than 1 actually are growing about twice as fast as the average bank. And so they have the growth rate and the extra cash to put into the investment in innovation. And I think they're the ones that are the leaders in innovation, both organically because they're growing their revenues and have the extra bit for investment, but they also have the currency in their stock price to be able to do acquisitions where and when they need to.
And picking up from that, what are the most expensive mistakes you are seeing banks make when it comes to innovation?
Yeah. So I would say it's the most expensive mistake is to stay with a loser, right? So in a sense, it's not that you fail, but that you recognize that and stick with the failure. You want to learn from the failure. If things are not going well, adjust, right? What's the old saying of a battle plan never exceeds the contact with the first or the first contact with the enemy. So banks need to say, well, if it's not going right, what am I learning from this? And you need to adjust and adjust quickly.
That agility, I think,
yes,
people talk about as well. Well, thank you so much for joining us, and I wish you all the best in the rest of the event.
Oh, great. Good to be here with you again.